In this video, I want to follow up with you a little bit on corn and soybeans. These two markets have been on the move for the last 3 months, and as you can see, they've gone through a beautiful Elliott Wave pattern almost straight out of the book. Couldn't have drawn it any better if I'd have done it myself. And as we come in here and we just very quickly outline this thing, you can see this was our initial break right here. So this was the break for the initial first leg of that Elliott Wave. So here's drive one. We see the counter trend in here, the breaking of the counter trend. This is where we get the pullback, and then the second opportunity for entry. This is the entry point right there. And then, of course, this is the next drive high. As we come in here, we have our second drive up, and then once again, we get our counter trend in here. Remember, it's always a long set of dots followed by a short set of dots followed by a long set of dots. And we anticipate 3 long sets of dots, right? So long, 3 long drives. So this is our trend trading strategy, right? Trade the trend. This is the counter trend for entry. Trade the trend. Counter trend for entry. Trade the trend. We generally see 3 of these, right? Because this is an Elliott wave. This is what we call an Elliott wave. We come in here. We're going to go X, 1, 2. This is 3. This is 4. This is going to be what I'm going to call the peak right in here. Doesn't mean it can't turn around and go back up and create a little bit higher peak up in here, but this looks like to me this wants to be the peak. We're going to come down here and anticipate a pullback down the A point. It's going to go back up and attempt to break that 5 wave, and it's going to fail, and then it will fall and come back down. So this is generally what we see in an Elliott wave topping formation. And as you can see, this is a 1, 2, 3 top formation, or if you go back a little bit further, this is what we call a head and shoulders formation. So we come in with the head and shoulders. So we're looking for the neckline to come in here and to anticipate a neckline, and then a breaking below that neckline would be a confirmation of the downtrend and reversal. Where do we expect it to go after that? Well, that's where we take the Fibonacci ruler and we measure the entire distance from top to bottom, and we anticipate a reversal back into the Fibonacci sweet spot, somewhere below 38.2 and above 61.8. So this would be our overall target for corn, and we're going to look for that to happen sometime out here in January, February timeframe on the daily chart. So this is what we're looking for, a little bit of a rally and then a pullback. And if you want to come in and start pricing out some options on this, you can see that this is the March contract, and we've got some 23-day options in here. We got some 52, and we got some 80-day options in here. If we come in and look at the March contract options, February might be good, but we could go back out to the 80. You can see, just to price these out very quickly, a put option is $818 on corn with 80 days until expiration. So that's what we'd be looking for on corn. So let's come down here and look at soybeans. I'm going to first look at the January soybeans contract. The January soybeans contract is coming to an end, as you can see in the volume. Everybody's starting to liquidate their long positions and get out of this market, and we're moving over into March. So this is the March contract. You can see very similar to the January, but the March is the one we want to be looking at. And if you come in here, once again, very similar to what we just saw over on corn. So you can see this is the breaking right here. This is the initial entry for this long position. These are oftentimes hard to capture because you're not exactly sure it's going to take off and run. So the next one, or the first one that's a little bit more obvious, is this second break. So we have our first break here, and this is the long set of dots followed by the short set of dots. We then look for the second long set of dots followed by the short set of dots, which come in right here. This is the counter trend. This is our signal to take a long position. And then, of course, the third set of dots. So again, couldn't have drawn it any more perfectly if I'd have done it myself. This is a perfect little Elliott wave pattern. We'll come in here and draw this out of here. There's X1, 2. This is our 3, 4. We know the breaks because the blue lights tell us. This is the part of the bulls and bears telling us this is what's turning the price bars red, yellow, and green, and giving those blue lights telling us where to break and where those 3 drive patterns are at. So there's 5, and then, of course, there's our 5th wave right up in there. 5, so what are we going to anticipate? Same thing as we were over on corn. We're going to look for an ABC 1, 2, 3 top formation, or a rebound off this top formation coming back down. And again, we can take our Fibonacci ruler, go from the bottom of the first drive all the way to the top of the third drive. And this gives us a Fibonacci sweet spot, or a pullback region, where we can anticipate this market coming back to, again, between 38.2 and 61.8. And we will anticipate for that to happen sometime right out in here. Again, this looks like a projection off of this top formation. If we come in with the same type of a strategy in here, somewhere out in into January, maybe 1st of February. If it drops a little bit more quickly, it could come in a little bit sooner, but this is kind of where we're looking for, anticipating this market falling back to. Again, if we come down here very quickly, we can look at, and last time we priced out some 80-day options on corn. Let's price out some 52-day options here on soybeans, and you can see that a soybean 52-day put option would be $1,381. All right, guys, that's just a quick summary of where corn and soybeans have been and where we anticipate their retracement and their pullback after this long uptrend.